Nation country. My name is Phil. This is the Fun with Bitcoin podcast. We are in season 3 and this is episode 18. Hope everybody's having a great week. Thank you very much for joining me. Joining us today for our chat is going to be Mr. Andy Estrom, and he is the author of the book Why Buy Bitcoin, and he's a wealth manager. So this was definitely an interesting conversation for me, as I've never actually gotten to speak with anybody from I guess we'll say the wealth management side of things. So I also find it very fascinating that people who did that much research and just have that kind of that knowledge about the current banking system and the investment thesis, to be able to switch over to Bitcoin. So I find it very fascinating. Like, how did they do it? How did they unlearn what they learned? Anyways. Before we get into our awesome conversation with Andy, we're going to hear a word from our sponsor, Swan Bitcoin. All right, guys, we are going to talk about Swan Bitcoin, and we are going to talk about dollar cost averaging. As you guys know, they're my first official sponsor, and I'm obviously really glad because they are Bitcoin only, and that's important to me. Very important, actually, probably the most important thing. But anyways, let's talk about dollar cost averaging, right? Because in the end, we don't all have the full amount of money that we are going to put into Bitcoin all in one shot. And what is, I believe, to be the safest and easiest way to get into Bitcoin is with dollar cost averaging. And Swan Bitcoin offers you 3 really easy things to remember, okay? You can automatically withdraw from your bank account, automatic purchase of BTC, and automatic withdrawal to your chosen address, okay? It's nice and simple. It's run by some good people, and I definitely suggest any Bitcoiners to go and take a look at Swan Bitcoin and see if their dollar cost averaging platform works for you. All right, guys? So check it out. The link will be in the show notes. All right, we got the dollar cost averaging done. Now, on with the show. Here's my chat with Andy Estrom.
Hey everybody, thank you for joining us on another Fun with Bitcoin podcast. I'm your host, Phil, and joining me today, I think is a little bit of a different type of guest for the Fun with Bitcoin podcast. I've got Mr. Andy Estrom on with me, and he is the author of the book, Why Buy Bitcoin? He's also a wealth manager, an investor, and what I'm seeing here is a self-proclaimed FUD buster. So, Andy, thank you so much for coming on the Fun with Bitcoin podcast, man.
It's great to be on with you, Phil. I'm a fan of your pod. You've been doing this for a while, and it shows. And so happy to talk with you.
Thank you so much. I really appreciate it. And before we dive in, because I know very little about you, or your rabbit hole story, so I'm obviously going to want to explore that as well. But what I find is interesting is I've never actually gotten to sit down and speak with a quote unquote wealth manager on the topic of Bitcoin. Right? It's always other enthusiasts, so I'm definitely excited to chat with you about that. So thank you very much. And I guess we'll get right into it, man. What brought you to Bitcoin? Like the thinker question behind the thought.
And I'll go on a quick tangent just to respond to your comment a minute ago, which is the reason you haven't talked to a wealth manager about Bitcoin is most of them haven't done the work to understand it yet, which is why I wrote the book. But yeah, so how did I find Bitcoin? Real quick on me. I came from the dark side of finance. I grew up in LA. I went to school in Massachusetts, which I understand is home for you now. Worked on Wall Street, worked for Goldman Sachs for a couple of years. Then I worked for a private equity fund after that. That was spun out of the Carlyle Group, which is a big private equity fund complex. And then I worked for a multi-billion-dollar hedge fund here in LA. And then I switched into my family's business, which is wealth management. And that was over 7 years ago. And yeah, I found Bitcoin when a couple people were pinging me about it in early to mid 2017. The first exposure was actually reading The Economist magazine, which I do religiously, while I was on vacation. That was 2013. And of course, I didn't understand it, and it just totally went over my head, and I ignored it. And then I heard about Bitcoin again when I think I heard about Ether when the Dow hard fork happened in 2016. But yeah, it wasn't until 2017 that I really started digging in, and basically it came down to, I pulled up Coin Market Cap or something, and there was, I don't know, 10 or 20 billion dollars of value there in Bitcoin, and I don't know, another 10 or 20 billion in the overall crypto market. And I thought, there must be something here. Maybe it's a bubble, maybe it's a scam, maybe it's something really exciting. Turned out to be all three in varying forms. I'm talking about crypto in general, of course. And yeah, so that's how I originally found it. And then, I went through the usual progression for most people, I think, which is seeing Bitcoin. I know that's cool, and then seeing all the other alts and seeing, wow, this one is faster and the other one is more efficient, and all these whiz bang features, and Bitcoin is obsolete. I always, by the way, kept my largest personal position was in Bitcoin among all the cryptos, but over time I became much more focused on Bitcoin and less focused on the alts. So I did the usual journey. People get distracted by I get distracted by all these other shiny things, and if they work hard enough and dig deep enough, they finally come to realize that Bitcoin is the thing. So that's sort of the short answer. And I didn't get to the book, but I can tell you how I arrived at that. It was, let's see, so it was early last year. It was January 2019, and Bitcoin was down to 3K or something. And I had figured it out, and I knew I needed to get my clients involved, but I knew that they weren't going to understand it. I'd sort of tested the waters a little. I'd had a couple preliminary conversations, and it was mostly blank stares and looks of horror, right? What, you want me to buy the criminal money, or that's that type of thing. The usual FUD, which is why I've adopted the FUD Buster moniker on Twitter. Is I feel like part of my job is just responding to the usual criticisms about it's going to boil the oceans, or it's criminal money, or it's always exchanges are always getting hacked, whatever. So. But I realized I was going to have to tell the story, and I knew that I was going to have to just write it down, because if you're trying to talk to somebody who really hasn't done much work, that 1 or 2 or even 3 conversations is not going to get them there. So I knew I was going to have to put it on paper, and I thought, if I'm going to put it on paper for my clients, as well as family members and friends, why not, do it in a format that's easily readable, that's not not too big a lift, not too heavy a lift in terms of the total reading. I mean, it's definitely shorter than some of the other books on the market, but I didn't want to sacrifice anything major in terms of the pieces that were required. And so I started writing it in January. I actually finished 80% of it in a couple months, but then I realized that it was too technical, and so then I went through a process of editing, adding in a few anecdotes and stories from my time, working on Wall Street. And and that was the process for getting the book out. And the book came out in September. So long-winded answer to your question, but that's sort of my story of Bitcoin.
No, I absolutely love it, and obviously I have some follow-up questions for you. Okay, so I mean, to me, you come from the traditional finance background. Okay, so so to me, like, I find it's because we have a lot of kind of this this brainwashing that just goes on, all of this information that we kind of take for granted, right? The government prints the money, and they up the supply, and the obviously the backing from gold was taken away, all that stuff. Like, how did you unteach yourself, like, because essentially in order to be able to see Bitcoin for what it is, you kind of have to be willing to take a step back from the traditional information that we've been fed. Like, I guess, do you recall what it was that kind of triggered you to decide that this was a worthy rabbit hole to go down?
Yeah. So you're right. We are all, as Brady Swinson says in Bitcoin, we're all default Keynesian. At least most of us, right? And I took an economics degree from a good school, and it did not prepare me well. There were some, useful piece of information that I learned, but in terms of the framework, yeah, I was not trained in Austrian economics, and sadly, as you know, the Austrians get short shrift in our education system. So yeah, so how did it? So for me, you're absolutely right. Bitcoin was definitely a forcing function for understanding Austrian economics. And so if I think it really was, honestly, curiosity and greed, right? In other words, when I started looking at Bitcoin, I started looking at crypto in general. I obviously had to absorb, some of the computer science, um, some of the psychology and political science, some of the game theory, some of the tech. Obviously, I had some of those pieces in place. I had covered tech, on and off for years. The game theory, I was pretty strong on. I did not have the distributed systems, computer science, except for I did know, some about how the internet was architected. Yeah, so I definitely had to do the work and pick up those pieces. I did not have the Austrian economics at all. I'll say one footnote is I started buying gold for my clients in 2016, and that took some effort. Credit to Matt Fair, my former colleague at my prior job at Tenenbaum Capital, and he started, sort of pulling on my shirt and saying, "Hey, you ought to start thinking about how much money they're printing." This was after the financial crisis, right? Um, and thinking about gold and being raised and trained as a fundamental investor, sort of, or a value investor in sort of the Warren Buffett school, except, with a positive inclination toward tech,
Yeah.
which he does not have, although he's sort of grown that later in life, acquired that later in life. But so, I never believed that anything that didn't generate cash flows was investable, right? So gold was like totally anathema. Now, I finally got over that hump in 2016, thankfully. But yeah, going down the rabbit hole with the Austrians was just my desire and interest and curiosity to really fundamentally understand Bitcoin. And obviously part of that was exposure to great minds who are already in Bitcoin, who are coming at it from the Austrian angle. I mean, obviously, Stefan Livera, whose
Yes.
podcast I was on, I did an episode with him, I guess about a month ago. He was one who definitely had an impact on me. Probably Pierre Rochard and Michael Goldstein, played a role there, in just sort of piquing the interest, coming at it from a very strong Austrian perspective.
Mm-hmm.
That was important for me, thinking about and doing my homework, and as well as probably Saifedean. I mean, I read the Bitcoin Standard, and that obviously influenced my book. I cite that book, his book, in my book probably more than once. And yeah, so all these things clued me into the importance of the Austrians, and finally got me to read, Human Action, Man, Economy, and State. The sort of seminal works, which are extremely lengthy. They're a slog, but man, they're great stuff. And anybody who really wants to get into the weeds and understand from first principles, that's practically required reading. But yeah, that's what I'd say. That's how I approached it.
Very cool. I also wanted to add to that book list. One that I also recently finished was The Road to Serfdom.
Yeah,
which was
I had read. Sorry,
oh no, go ahead.
That is the one that I had actually been exposed to prior, because that one is what you should remind me. Tell me about your experience. Like, how long did it take you to get through it?
Okay, so I have to be honest. It did take me a while. It took me longer than some other books, and I had recently read the Taleb brick. Right, anti-fragility, anti-fragile. Sorry, Inserto. Thank you. Yes, exactly. I apologize. I call it the brick, but it's, but that's
well. Look, Taleb is required reading. I have read every one of Taleb's books at least twice. I mean, Fooled by Randomness, Black Swan, Anti-Fragile, Skin in the Game. There's the short one of aphorisms.
Bed of Procrustes.
Yeah. So yeah, that stuff is amazing. And anyone who lived through the financial crisis and hasn't read that stuff is definitely behind the curve. And you're right, there's a lot there. I mean,
Yeah.
it's a lot of page material. Although frankly, I bet you that those books in total, the total page count on those books probably isn't much in excess of just, human action. I mean, human action's like 500
Oh,
pages.
I, Human Action is still on my to-do reading list. I did Road to Serfdom first, but it's I actually have it on my Audible wish list. But to go
Yeah.
back to
Go ahead.
oh yeah, just to go back to your question about the Road to Serfdom. So it was a very dry read. It was actually to me very long and difficult. And my main takeaway from that book was really that. And again, I could totally be wrong, but the main takeaway for me was that when we organize our resources and we centralize without actually without correct incentives, we always end up leaning towards socialism. Like it's
Yeah.
like all the fucking roads lead to us in that place where, you know what I mean? Like everything is just, doled out, checked, and it's, a small cabal of people that manage and run everything, and you are just this, lack of a better term,
And
a fucking peasant.
that's exactly where we are today, right?
Yep.
I mean, that's where we are with government policy. I've the last I don't know if this is of interest or not, but I've been self quarantining, right? I've been in lockdown for now 5 weeks. Okay, I
Same.
haven't left. I've only left the house one time, and I'll tell you why. I had a check and I had to go to the bank to deposit it. So the legacy financial system screws me again. I put on my mask and I had my rubber gloves and I went to the drive-through ATM. Right, I didn't go into the branch. I went to the drive-through ATM. I sprayed down the keypad to go deposit my check. But other than that, I haven't left the house. And so it's been a weird time. I mean, it's been very stressful. Anybody who's investing or managing money, either for themselves or for clients, which is the case for me. It's been a wild time, and I look at the state of the world today and the state of the markets, especially stocks, because obviously that's a key part of what I do. And I scratch my head because we had this big downturn, and we've had actually a very substantial, relief rally, which looks to me like a bear market rally. I mean, I'm not going to say that definitively, but I do
Yeah.
worry about sort of the second down leg. And yeah, I look at government policy, and we used to joke, or at least I used to joke about this concept called QE. That's quantitative easing infinity, right? QE infinity. That was a joke before, and now it's real.
It's
It's
totally.
literally real. There's no limit on how much is going to get printed, and they've said that explicitly. And yeah, and then meanwhile, every huge parts of America are now forced onto the dole because they've said you can't work. Like, you can't do your job. So you can't leave the house. I mean, it's varying degrees, and it's in different. It's not exactly national down, by decree, but at the state level and at the local level. And so, yeah, we've been pushed into this scenario in large part due to the errors of the state in the accumulation of debt, right, in the decades since we left the gold standard. But yeah, we got to be really vigilant right now about falling into that socialism trap because it's literally happening as we speak.
Oh yeah, I totally agree. And just to comment on the stock market, because I mean, don't get me wrong, I'm not gonna pretend I'm just an amateur, right? I've been buying and holding stocks. I'm not a day trader, but been doing it since
Yep.
I was about 20, and so about 20 years. And I gotta say, um, once I understood that they're just going to print us out of this, I understand that although the stock market, like, we may have another leg down to go, um, but the stock price is, to me anyways, the actual dollar values are simply just going to keep going up. I mean, for the companies that generate cash flow, like you look at a Visa or MasterCard, you know, the government printing money doesn't really, I mean, to them, it doesn't hurt these people, you know?
No, I agree with you. I agree with you 100% on that point, and that's where we have this tricky balance right now. So,
Yep.
so yes, if we print infinite money, then the price of most everything goes up, including and especially risk assets, as you say, stocks. And then of course the problem is are you beating inflation, or by how much are you beating inflation? If the stock market's going up, let's say the stock market goes up 7% a year for the next 5 years, but inflation goes up 5 or 6% or 7% or more. So there's that issue, and so I agree with you. I mean, I don't, in nominal terms, I'm not sort of bearish in nominal terms in the abstract, but then I go back to your former point about the road to serfdom, which is, what does capitalism look like? Capitalism was already having a little bit of a hard time, let's say, prior to this event. And what does it look like in the future? We had the Occupy Wall Street movement. I think that was 2011, and it was some people made some noise in Zuccotti Park, New York. It wasn't that big a deal, really. But I think after we get through this crisis, not right now, because people are hunkered down. Millions and millions of Americans have lost their jobs, probably soon to be tens of millions. They're just trying to survive. But after we get through it, maybe it's a year, maybe it's 2 years from now, then people are going to start asking questions and realizing where the money in this $2.2 trillion, that's what they're planning to spend already, but there will be more. They're going to be figuring out, where it went and who got bailed out again, and which executives, got their compensation packages supported again. This already happened in the financial crisis 11 years ago, and now they're doing it again. And they're going to really start wondering about the overall system. And the restrictions that are going to be leveled on companies and boards and the changes in corporate governance, that's going to be negative for, let's say, stock prices and investors. I mean, once the government is a shareholder in your company, you have to apply a higher discount rate to the future cash flows that you might earn, right? The valuation should go down in that case. So yeah, that's what concerns me is what does capitalism look like on the other side of this, due in part to social indignation and pushback, which is totally justified, and due in part to the government's involvement. So yeah, I mean, it's hard for me to see, the S&P, being worth 20 times earnings in this new environment. It's just hard for me to see the valuations there. So yeah, it's a tricky balancing act between what you suggested, which is nominal prices probably go up, but what's the right valuation level for these companies, and we don't know yet.
That's exactly right, and I'm definitely worried because we've obviously never printed this much in such a short period of time, and it's so okay. So we're obviously we're at this spot, and enter Bitcoin, right? You've got this, you've got your book, you've got your book that you mentioned. Now, I just want to kind of touch on something about your book. Because you started off right at the beginning. Hold on a second. So check this out. So reading this book may cause you to question some fundamentally held but insufficiently examined assumptions about the world. So it's interesting, right? Because that goes back to that goes back to the whole red pilling. Is that all of a sudden you now have to get introduced to all these different aspects, the technology, the philosophy of it, the economics of it. So it's definitely scary. And your first chapter, I believe, is why money. I think
why is money?
Yes.
Why is money?
Why is money? I was like,
what is money, right?
And that's your.
And there's a chapter called "What is Money," but the first chapter, prior to that chapter, "What is Money," is a chapter "Why is Money," and that is an effort. By the way, so the big picture on the book, just in a nutshell, is why and what is money. It is what is the current state of the financial system in the world in terms of debt, right? Which is a big problem. Then it's, what is Bitcoin? And then it's, the upside case and the valuation for Bitcoin, and it's the risks of Bitcoin, and it's Bitcoin as an investment, in the context of a diversified portfolio. So that's the book. And yeah, as you point out, the why is money question, what I really wanted to do was I spent a few pages basically on fundamentals of, really evolution of civilization, the fallacy, I shouldn't say the fallacy, or the misconception of barter, right? People like to think that before there was money, there was barter. And there may have been some barter, although the work by David Graeber, who wrote this great book, called Debt, the First 5,000 Years. And this is actually a book that was promoted by Wences Casares. Wences Casares was sort of patient zero. He's the founder of Zappo, which got bought by Coinbase. He's sort of patient zero in Silicon Valley in terms of people, or exposing people to Bitcoin. And so anyway, so what Graeber said was, look, there's no anthropological evidence, basically, that barter was very popular. What he suggests is more likely when we were all living in small settlements, right? After we were wandering in the bush and we settled down and had agriculture, chances are that if I wanted to transact with my neighbor, it would basically be on an informal debt system, right? I have wheat and he has chickens, and I need a chicken, but he doesn't need my wheat right now. So I take his chicken, instead of giving him wheat, he just says, owe me later, basically. And that works because in a small society, in a simple society, you basically transact with your neighbors. You never leave the settlement, right? You basically live, marry, have a family, die in the same area for the most part. And so there's those bonds of trust that are the basis for commerce at that small scale. And it's only once you get higher levels of trade and larger settlements where, no longer do you know everybody personally that you're transacting with, and therefore money, really comes into play. And so I felt it was useful to cover that in a few pages. What I don't do in the book is get into great detail on the history of money. There's other people that have, frankly, done a great job of that. I just didn't want to spend, 100 pages on that issue. But I do spend a few pages, let's say, on sort of the basic civilizational logic for why money exists, what's the anthropological historical basis for that, and that launches into broader discussions of what is the state of the world today in terms of money and in terms of debt, and how that dovetails into Bitcoin.
I think that I really appreciate that you start off the way that you do in the book, because to me anyways, one of the most difficult things about explaining Bitcoin to people is that you first have to explain to everybody what money is, because apparently we are all a bunch of, to be honest, for the most part, idiots wandering around that don't actually understand what money is. We only understand the piece of money that we use. So you know what I mean?
Totally. I mean, I was totally ignorant of this, right? I took a degree in economics. I did, the CFA program, which is sort of the, gold standard for professional investors. I mean, I went through all these processes without learning, and then, by the way, spending, a decade and a half as a professional investor without learning really what the fundamental tenets of money are, which is pretty amazing, right? Amazingly ignorant is what I was. So, if I worked in the financial industry for that long without truly understanding the basis of money, well, I can be pretty confident that most other people, haven't either. Because most other people, don't. They're sort of even less adjacent to the world and the use of money. So yeah, it's an important thing to understand. It's important to understand that at the fundamental level, money is a medium of exchange across both space and time, and it's from that basis that you can understand the development of money as well as the underlying characteristics. And that's key in the book. Is I identify 14 characteristics of good money. Most people identify 5 or 6 or 7, and I go on to score the dollar and gold and Bitcoin along those characteristics, which I think is a useful exercise. It's imperfect, but it helps sort of get the gears turning in the brain in terms of thinking about, why have certain forms of money been successful either on and off for periods of history, or for longer time periods, and how could Bitcoin fit into that framework? And key to understanding that, of course, is that the old kinds of money are either flatlining or in decline, right? We can say that gold is gold. I mean, without getting into the weeds on the history of gold, right? Like, let's just say it ain't changed much in the last few thousand years.
Nope.
So it is what it is, and it's a great form of money in certain ways. And then you look at fiat, and especially the dollar, and you say, well, okay, that's in decline, right? As the central bank, as the Fed, prints literally unbounded, amounts of money, and as central banks around the world print, the quality of that money is going down. And then in contrast, I argue, Bitcoin is going up, right? It's improving. One is just the Lindy, effect of how long it's been around. And then two is literally the new layers, second layer solutions, third layer solutions, whether it's Lightning or something else, whether it's the exchanges improving. I mean, the infrastructure that's being built on top of the base layer is continuously improving as you've got, tens of thousands or more of smart people working on it all the time. So I think it's important and useful to understand the trajectory of Bitcoin, which is upward, and the trajectory of these other legacy forms of money, which is either flat or downward.
I definitely, I really like that, and I think that really, really helps with perspective, because people like pictures, people like graphs, So if you can show a nice, easy story to somebody, they're more likely to grasp the concept. So
yeah, no, I agree. I'm just going to interject one thing, which is the easiest and most important probably graph, in the book, and most important concept in this whole larger arena is the debt level, right? And I lifted stuff from Ray Dalio. He's written a lot about it. He runs the world's biggest hedge fund, and you just look at debt as a percent of GDP over the last century, and it's pretty simple. The first century, you had World War II, and I won't get in the weeds right now about sort of what happened during and subsequent, but suffice to say that debt to GDP post-war, and while we were under the Bretton Woods, gold-backed system, this was 1944 to 1971, I think. Debt to GDP was basically flat. It was kind of in the 140% range. I'm talking about total debt. That's government debt plus corporate debt plus household debt. And then we went off the gold standard, right? And it just starts, climbing like a rocket ship. And we got to 330% of GDP. I think it was actually close to 350 around the financial crisis. And then in the 11 years since then, total debt to GDP fell slightly, and then it flatlined, and now it's going back up again. And you can't. That's the single, I think, most interesting and simplest graph in the whole thing. And it's just the ongoing rise in the level of debt. And my belief is that has to resolve itself. And I lay out, the scenarios in the book that I see for how it could resolve itself. But the least painful and most obvious way, in my opinion, is ultimately inflation.
I definitely agree, and it does obviously kind of scare me in a way, because there are no other tricks. There's nothing else for the system to do than to continue than to continue to print money. And as we've seen with all fiat currencies, they all trend to zero. So
that's right.
Or in our case, right. I mean, below zero.
The history does not bode well on this point. Yeah, I think the average lifespan of a fiat currency is 30 years or less. And you can look at reserve currencies and you say, okay, the average reserve currency maybe lasts a century or century and a half, right? The Spanish currency had its day, as did the Dutch currency, as did the British pound, and then it's been the dollar, for a century now. But we're probably closer to the end than the beginning for the dollar, and it doesn't bode well. And the menu of options is, there are other ways to get out of this debt problem in theory. I mean, you can have austerity, right? You can cut budgets. Well, politically, that's impossible. So yes, in theory, it could happen, but practically it won't. I mean, you can have mass defaults. You can have a depression, or you can have a jubilee, right? You can have forgiveness of debts. And again, problematic, those things, because of what they do to, defaults just mean, Great Depression, basically, and nobody wants to live through that. A jubilee causes you to call into question sort of all property rights.
Well,
right?
yeah.
If you can just change a contract, by fiat, quote unquote, then it's like, well, what's the basis of any of, of our economy? So then you get into other options like financial repression. This was a term that was coined by a couple of Stanford economists back in the 70s. That's ongoing. That includes keeping interest rates really low. It, in a lot of cases, includes capital controls. We're sort of not at that level yet in the U.S., but it wouldn't surprise me, if we see that. And then, of course, you've got, austerity. I'm missing, redistribution. That's coming, right? That's ongoing. I mean, you could argue that, the checks, I could, on the one hand, argue that the, $1,200 checks to Americans that need cash is redistribution. Although, unfortunately, for every dollar that's going direct to consumers, more than $1 is going to corporations, of varying size. Some is direct bailouts of large corporations. Others is, money funneled through quote unquote small companies. That's companies of 500 employees or less. But, no doubt some of that's going to accrue to the CEO/owner of those companies. And so you've got that factor. And then the last is just money printing, which is ultimately inflationary. And when I wrote the book, which is not that long ago, published in September, if you'd asked me how long is it going to take till we get inflation? And when I say get inflation, I'm talking about, let's say 5 to 8% annualized, CPI, consumer price index inflation. Yeah. I would have said, well, within a decade, right? But I don't know when in the decade. Like, it could be 2 years from now, it could be 10 years from now. Not anymore.
Now it's 2 years from now.
I had clients exactly a week ago. Okay. I put a note out to my clients saying I have brought that timeline inward by about 5 years, essentially. I will be pretty surprised we don't see mid to high single digit consumer price inflation, within the next 5 years. That's my view.
Oh, yeah. I mean, if we don't see it, then it indicates to me that something in the system is artificially holding that number down, which is also frightening in its own right.
Yeah, it is. And by the way, when I talk about CPI, I'm talking about like CPI as reported by the government. Mm-hmm. I already, take the view that the official inflation numbers are understated, perhaps by a significant amount. But the reason we know the inflation is coming is because the Fed has told us, okay? And I cite this also in the book, which was, I think it was May of last year, the Fed made a statement, the FOMC, written statement, right? This is an official release from the Federal Reserve, talking about the symmetry, quote unquote, symmetry in the inflation target, which means, their target is 2% annual inflation. But what they've said is, according to the way we calculate inflation, we being the Fed, we've been undershooting that 2% target for years now. So because our target is quote unquote symmetric, it would be okay if we overshot for a while. And then in the most recent period, right, the last month or two, I've seen the word symmetric with respect to the inflation target continue to pop up, right, in releases from the Fed. I mean, they're literally putting it on paper. They're saying, look, guys, we're going to give you higher than 2% inflation. And because we undershot for so long, it would be okay if it was higher than target, for a while. Now, what that means in practice and how it plays out, we don't know. But what we do know is they're going to keep printing until they get the inflation. They're going to do whatever it takes to deliver inflation.
That is just absolutely brutal. It
really
is.
Which is why buying Bitcoin, buying hard money assets, right? So like I look, what do I do for my clients? Well, for my clients right now, it's gold and Bitcoin. And, there's some in the Bitcoin community that are very anti-gold. I'm not. I think it's okay right now to own some gold. I think it's a great idea, in fact, to own both gold and some Bitcoin. If you can, stomach the higher volatility of Bitcoin, well, then feel free to skew your portfolio in that direction. I think that makes a lot of sense. So yeah, it's a great time. Another way to look at this, by the way, I had a conversation the other day with a friend of mine who's in the industry, which is if Bitcoin doesn't rally, let's say in the next 18 months, right? If we get to the end of 2021 and Bitcoin is not a lot higher, then we might have found out that we were wrong, so to speak. In other words, if the thesis doesn't play out, in the next year and a half, I'll be scratching my head, right? With central banks printing infinite money, it would be kind of shocking to not see the price much higher in that time period. And I, by that point, would have to question my assumptions, let's say, about the whole thesis. So, yeah, right now I am accumulating. I'm stacking my sats. I'll put in one chill, which is there's one and only one company that I've invested directly in the space, that's Swan Bitcoin, which is, as far as I know, the cheapest way basically to set up an auto dollar cost average DCA system.
Yep.
And
0.49%, I think.
Yeah, I think that's right.
Hey, if you do the auto DCA.
Yeah. And it depends, by the way, on how much you're stacking. I think you get a better rate basically if you increase your weekly stack amount. But yeah, I mean, it's just a logical way to accumulate the world's hardest money over time in a period when the central banks of the world have promised on paper to deliver inflation.
That's brutal.
It's kind of no-brainer, right?
And
by the way, I have to give the usual disclaimer, which is, all these opinions are my own. None of this is investment advice. None of this represents the views of my employer, Westcap Group, right? These are my personal views, and do your own research and all that good stuff.
Heaven forbid people take personal responsibility for the decisions that they choose to make from the things that they hear.
Yeah, that's right. You're within your rights to, hire someone like me, basically to do your investing for you, and many people choose to do that. But yes, it's buyer beware and be careful and just be ready for volatility and all this stuff.
And I just want to add the platform that you're talking about is Swan Bitcoin, right? And they just recently got launched, and everybody should definitely go check it out. I'm obviously going to put the link in the show notes, and as the Fun with Bitcoin listeners know, they are my first official sponsor, Bitcoin only, and I'm super proud. So obviously I'm happy to have you on this show, and I found out after the fact that you were involved with them, so that totally worked out for me. And like I said,
happy coincidence.
Yeah,
because I had reached out to you. I was thinking about who are my favorite podcasts. Who are my favorite Bitcoin podcasts, and who have I not had a conversation with? And I pinged you, and we discovered soon after the fact that we had this commonality. We had this in common.
It was pretty cool. I did. I know that you got to get going soon because you got other meetings and everything. But I did want to ask you, in being a wealth manager, what to me, I guess. Are you seeing, is it people coming and asking you about Bitcoin, or is it more you reaching out to people about Bitcoin?
Yeah, it's definitely a mix, and it's mostly demographic, right? So I have actually a lot of baby boomer clients and even older clients. So those guys are, for the most part, nowhere on this stuff, right? It's been me coming to them saying, hey, take a look at this, basically, and you're going to see it in your portfolio. And some of them are sort of indifferent. Some of them, were shocked and horrified, at least at the beginning, just because of all the bad headlines they've read in the press, in the mainstream media. And among that demographic, like, no, it's none of the inquiry has come from them. It's been my initiative. Now, amongst the younger cohort, there it's more of a mixed bag. And I have, of course, gotten some inbound interest, just kind of out of the blue as a result of people either, reading the book or hearing me on a podcast. So there has been a little bit of that.
Cool.
Yeah. So that's been great. But it's basically been a straight, the defining variable there basically is your age, at least in my experience. And if you're older, you're clueless and / skeptical, or at least you have been on average. And if you're younger, then it's much more of a mixed bag. There's definitely some skeptics, and then there's some, people who are sort of more curious and or interested. Yeah, that's kind of the spectrum, I would say.
Cool, very cool. So, okay, we're going to wrap this up, but before we do you have any final thoughts you want to leave with the listeners?
Yeah, of course, I'll show the book. It's called Why Buy Bitcoin. The subtitle is Investing Today in the Money of Tomorrow. And it's available on Amazon. Amazon's the primary channel. You can either get it in physical copy or you can get the ebook version. Oh. It's also available on Apple. Yeah, so there's some places, by the way, I have the experience I've had a couple people like, John Dallas, I was on his pod, I don't know, a couple months ago. He ordered a physical copy. He's in Newfoundland, I think, and it took him like 2 weeks to get there. So lucky for me, in the interim, he also ordered a digital copy, so I managed to sell him 2 books.
Nice.
Suffice to say that depending on where you're located, physical delivery can take longer depending on what Amazon's doing. But anyway, follow me on Twitter. My handle is Edstrom Andrew. That's the last name, first name, Edstrom Andrew. And then I do have a personal website. It's andyedstrom.com. And that's mostly, a list of podcast appearances and stuff about the book. And then my firm is westcapgroup.com, for anyone who's interested in, learning about wealth management services. So there it is.
Cool. I'm going to post the link in the show notes. And I'm sorry, I did want to ask you, because I was talking about this with you. Are you going to do an Audible version?
Oh, yes. So good question. So I definitely would love to do an Audible version. And I've actually received several, offers from people generously. Guy Swan is one, but also several other people. And so I'm really grateful for those offers. And to be honest, I have been, running around like chicken with my head cut off for the last couple months, since the financial market turmoil. So I've not sort of had any time to think about it. And my expectation is that if and when I do the audio version, I'll probably do it myself, just because I feel like, I feel like, it's hard for anyone to sort of capture the essence of it, who's not the author themselves. And the second thing is I've actually, solicited a few people about, hey, what should I do? Should I do it myself? Should I have someone else read it? And most people say they say that they love it when authors, do their own narration. So that's my inclination. The problem with that inclination is I haven't had the time to do it. So I would love to do it. But what I would say is don't hold your breath. It might not be doing anytime soon.
Okay. Well, we're going to try to put some pressure on you for that. But man, that's, but again, thank you so much for taking the time to be on the Fun with Bitcoin podcast. I really appreciate it, Andy. It's been really cool talking to you.
Yeah, Phil, pleasure is mine. Thanks for having me on. And hope to talk again soon.
All right, cool. Cheers.
The links will be in the show notes to everything discussed. And of course, if you want to reach me on Twitter or Telegram, I am at Coinicarus. If you want to shoot me an email, I am coinicarus@funwithbitcoin.com. All right, everybody. Hope you had a good time. Thank you for listening and catch you all next time.